Hi, everybody, and welcome back to another Treasury Tuesday. I know it's been about 2 weeks, so hopefully we have an exciting one for you. I know I definitely missed it, and so as always, I post the Treasury Tuesday agenda in the voice chat. So go ahead and grab that and follow along. We should have a fair amount to go through today, but I wouldn't be surprised if it ended a little bit early. Just depends on how much discussion we have. But with that being said, I'm gonna go ahead and dive on in. But as always, feel free for anybody to interrupt, throw their thoughts, or kind of add their input at any point. So, starting out with the recent events and news section, I guess starting out with some proposals. So, the establishing a testing wallet KIP passed unanimously, I believe, and essentially what this is giving us the tools and some capital for us to develop some internal strategies, gather more data about our own protocol, and just improve it through the use of that data, as well as potentially use it for some marketing as well. So excited to get this kickoff. I know Pi is setting up that wallet, and he needs to set up a multi-sig with that, and to interact with our protocol, he needs to do a little bit of extra work on that. So that should be hopefully sometime this week that he let me know today. But again, we will be funding that as soon as possible and kind of kicking that off. So I'm excited to see how that data gets started and what kind of strategies we can develop from there. The next one that passed, I think basically almost unanimously. I think there was only 17 votes against for whatever reason. But this is the non-core asset discretionary proposal, and this essentially just gives the Treasury team, which is basically the people listed within that proposal, discretionary ability to kind of rebalance or stake or liquidate small positions that are under $100,000 that really we're identifying as being non-core. So again, nothing overly material, but doesn't have to clog up governance with something that is relatively small and in the end relatively immaterial. So excited to see both of those pass with a lot of consensus. The proposals that are pending, I know the Treasury Charter is still pending. I believe that SOFON's reviewing that. I know that they've had some feedback on that, and so I'm excited to see where that one goes from here. But yeah, that one is still pending. And moving on down the line, I guess an update on the compensation front. So the contributors Sablier streams, which is how we pay under 2.5, officially ended today, or will be ending today, depending on what time they were set up. But essentially, we are very close to finalizing the details of compensation 3.0, and so wanted to just give you guys the high level timeline for when we hope to really kind of address things publicly and let you know where things are behind the scenes. So the initial presentation to all contributors occurred yesterday. We're kind of still going through that feedback and seeing what tweaks we can potentially make based on that feedback. And then we'll have an internal discussion period with regards to how these are being tweaked and just overall what's been said. And that should go through September 4th. After that, we will have a external period of discussion where the rest of the community in the DAO could have full insight into what's kind of been proposed to everybody. And again, nothing will be finalized at this point, but that's basically a week for us to kind of externally all discuss that. And then finally, assuming that everybody's on the same page and that there appears to be rough consensus, we will be actually executing and implementing the new 3.0 structure between the 11th and the 14th with the multi-sig operations, setting up new streams and whatnot, and paying the back pay around 9/14. So again, don't have a lot of details to share here. Again, the Sablier streams have ended. And so there's not pay for this little gap period, but we've communicated that to all contributors and let them know that if they have any extenuating circumstances to let us know. But otherwise, we will be externally communicating everything, roughly in early September. So excited to get that out there and excited to see the feedback around that. Moving on down the line, last week we definitely had a fair amount of pretty material Treasury actions, and if you click on that, you'll see a link to, I guess, our announcement of those, and that'll give you a little bit more information and some transaction hashes for you guys to see the information for yourself. But essentially, ETH deployment, as we had approval for, has started to be deployed. We set a bunch of limit orders through our own protocols to deploy them, and I don't think anything is hit because really the first step we were trying to get more aggressive with regards to some discounts on the pegs especially with ST and I think that they were outside of that range. And so the plan is for next week to kind of move those up to be less aggressive, to have hopefully some of those fill. And again, for this first tranche, we are only going to be deploying about 20% of the approved ETH that was under that KIP. And so excited to see those transactions hit. That'll be great volume for the protocol as well. And again, really excited to see those start getting deployed and see where they go from there. The next thing that was done was we brought about 787 wrapped ETH back from our own liquidity pools. I think it was KIP19, which sunset those pools essentially, or the vault product. Because of that, we've always been kind of assessing what the optimal ROI is on those pools and in our assets within those. And I think, from that, we kind of see how much of those are still being leveraged from flash loan purposes. And based on the historical data, that they are just not getting used to the max. And so what we did was we withdrew, our wrapped ETH, which was that pool in particular was being leveraged to a much smaller degree than the balance in there. So we wanted to kind of bring back that capital and potentially make that a little bit more productive. So excited to see that come back. And then finally, on some major transactions that happened last week, we liquidated about 1/3 of our CVX position, or about 93,000 units, and swapped that into ETH. So basically, a swap from a directional asset to another directional asset. And then the other remaining 2/3 we staked. And so, again, I think we've mentioned this in the past, but that KIP gives us a little bit of discretion to, as a community and as a team, as a labs team, to kind of not signal to the rest of the ecosystem about our intent from here. But again, we've liquidated 1/3 of that, and we will be kind of assessing in real time based on market conditions and other factors about what we want to do with that remaining position. So again, excited to see what we can do with that additional ETH as well. And then finally on the update side is our optimism proposal, and I think Starfire's here. So Starfire, you want to kick this one off?
Yeah, definitely. Thanks, Matt. So about 3 weeks ago, Optimism paused their funding round and voting on draft proposals to receive OP stimulus. This was to address some concerns delegates had regarding kind of the review process for grants. It kind of evolved into an engagement farming contest, and a lot of the delegates realized that wasn't really optimal. So they've kind of revamped the review process, and they came up with this idea for governance committees. And they're going to break it out into like a DeFi committee, NFT committee, a gaming committee, and so on. And the idea is to kind of let people who are or delegates who are specialized in certain areas to really have the opportunity to review these draft proposals. And along with that, they revamped the template for the grant proposals. Um, and one thing they added, which I found interesting, and I'm curious if anyone else has comments on this, is they added a section that said, or that says, I understand that I will be required to provide additional KYC information to the Optimism Foundation to receive this grant, um, which I thought was interesting because that wasn't at all included on the last template. And I tried to get a little bit of clarification, but um, I didn't really get any more information, so it'll be interesting to see what exactly they're looking for and how that KYC information is used. Um, and then one other development was from Paulie Naya. I'm gonna link his governance post in the voice chat. Um, but he basically said that he will not be voting for DeFi protocols. And he cited, regulatory risk and the everything going on with OFAC as kind of his reasoning. And I think that's fair, but it's a little bit disappointing. But I don't know. Curious to see if anyone else has thoughts around that in the KYC edition.
Yeah, and just a friendly reminder for anybody who is not aware of what this is they're basically having I think it's called phase one proposal, where they're trying to give a little bit of their rewards in the form of OP tokens to protocols that are going to be launching on Optimism to be a catalyst for further activity there. And so we applied for about, I believe, 500,000 OP tokens. And again, our proposal, I don't know if it's linked here. And Starfire could probably link it quicker than me.
Yeah, let me get it.
Okay, but yeah, just a friendly reminder for what that is. But yeah, again, to Starfire's point, curious what people think about the KYC and kind of the changes that were referenced. Cool. Well, it sounds like nobody has any strong thoughts about that. I definitely was going to say from my perspective that, I understand from the KYC they don't want just somebody to kind of come in, kind of fraudulently apply, and then just immediately liquidate and kind of run away with the cash. But it's pretty shocking just based on the ethos of the space. But again, I know this is a changing environment, so yeah, I guess maybe a little less shocking than it would have been maybe 6 months ago.
Yeah, and I raised this concern to you, Matt, but my question was, how are these the individuals that are KYC'd, how are they like kind of designated legally in relation to the grant? Because if they're legally defined as like the recipients, then they then become liable um, for some amount of tax on that stimulus because that's income to that individual. So I don't know. It's interesting.
Yeah, absolutely, and I think it raises the question of even if we weren't worried about tax implications and things like that, it's like we're DAO, we're a faceless organization for the most part, and who's that person that's going to basically be the KYC face of the organization? So we'll continue pursuing it. We'll monitor in real time. I think we have options if we do have to kind of follow the KYC procedures, but we're not going to do anything that could harm or create centralization vectors that may have additional risk implications for the DAO or labs or anything like that. So we'll definitely very much keep that in mind as we go through this process. I think that was everything I saw or wanted to talk about in kind of the events and news section. So wanted to see if did anybody else have anything they wanted to hit on within this section that wasn't maybe elaborated on to their liking. Easy enough. Okay, we'll go ahead and move on to the open floor section of Treasure Tuesday. And as we always kind of do in this section, is we just a friendly reminder: if you have something that is not related to the recent events or news that were listed, or you have something that you want to just kind of get off your chest or your mind about any kind of thing that may be treasury related, or set something up for that you'd like to see on the agenda for next week, here's your chance. So, does anybody have anything they'd like to kind of go into the open floor section on?
I'm curious about the compensation 3.0 state. Um, it mentioned that the initial presentation was yesterday, but I haven't been able to find any resources on that presentation itself. Is there anything publicly facing available for that, or any sort of update as far as the current level of thought in that timeline?
Yeah, so basically, we just presented that to the full time contributors yesterday. And so we had a session with our European contributors in the morning, and then another session with our US based contributors and kind of a hodgepodge of other locations at night. And so just kind of source some feedback. But yeah, nothing's publicly available. I will say that the goals of this program or this new structure are very much to make sure that there's tax optimization for the contributors, you know predictability with regards to their income and as it relates to the assets they receive, but also making sure that there's enough of a skin in the game to align interest for all contributors to the protocol and the DAO. So those were the at least. And there's probably some other things I'm leaving out from a high level objective, and as well as simplicity. But overall, those were the objectives that we had in our new structure. And again, that was presented for the first time to our full time contributors only yesterday, and then will be made publicly available around 9/4.
Okay. The reason I ask is while I was digging around in Lido documentation yesterday, I found a little excerpt mentioning ways that other DAOs are allowing contributors to reprice their incentives uh, by foregoing their current vesting period and token grant packages. I was curious if anything like that had been mentioned in those talks or was being considered.
Yeah, oh man, I wish everybody could see how much work and effort and time and effort went into kind of the development of the structures. We went through, I don't know, five or six, and they all were very different and similar in some ways, and very materially different in others. But one structure we were very much looking at was these type of vesting programs that were almost like very, and they would be structured somewhat like options that would be very tax optimized because again that was one of our main objectives. And through this process, we found a protocol, and one of my friends actually, who had basically developed a product or has been working with other DAOs and protocols to develop NFTs that were essentially programmable to do these type of token grant packages, investing programs, and options and things like that. And through that, you actually have the ability, because it's in the form of NFT, you could go on OpenSea, and because that programmable or because of that NFT is programmed on the blockchain. It's fully transparent about what those terms are, and so that would give contributors predictability and accountability about that vesting program, but then also the ability to make that liquid at any time that they of their choosing, with some other counterparty. And again, those counterparties could take that upside risk or that downside risk of whatever the token price is at that period in time, when it's fully vested, or whatever the terms may be. So we explored that heavily, and it was very intriguing. And I think that it could be a primitive that we'd like to use, down the road. But right now, in this point in time, again, simplicity was very much an objective, and so I think we found a better way, to make sure that people are aligned from a Rook standpoint without having to convolute it with other protocols that may have security risk or just have some complex options program, like this. So it sounds, maybe I'm interpreting it wrong because I'm not fully aware of this program, but we were very much exploring these vesting programs that still gave contributors liquidity options and near term incentives if they needed it.
Glad to hear it.
Yeah, and if anybody's interested in that product, and again, I don't know if they've made it fully live, at least on their website, but it's a hedgy finance, and really good protocol, really great team from what I'm aware of. We had a lot of conversations with them. Obviously, not pursuing it, but again, I really encourage anybody who's interested in that type of primitive. I think it could be a big hit, and I know they've been making some really great progress with a lot of DAOs and protocols and other communities. So highly encourage anybody to check that out for sure. Did anybody else have anything from an open floor perspective that they like to talk about? Or anything they'd like to put on the agenda for next week? I guess we'll go ahead and move on into the next section, and I think we'll probably end relatively early, depending on how this goes. But I know I've shown the treasury management framework a couple times and kind of going over the skeleton, and we've kind of talked high level about a couple things. But just wanted to kind of talk through some things and get people's perspectives on the specifics here. And I'm just lost my file. Where to go? So pulling that up, a couple things I want to talk about, and I encourage anybody to kind of make their comments seen, and a lot of these things are very much not set in stone. Again, this is not even up on the forum yet, but just wanted to kind of crowdsource as many good ideas as possible. And so one of the things I wanted to hit on first and kind of hear what people's thoughts are on, we have this non-core asset discretionary proposal, and I think that's, relatively broad. It's just basically saying if something's under $100,000, we have discretion to kind of move forward with it. But I think, we probably need something more comprehensive with actually defining what's a core asset versus what's a non-core asset. And so one thing, if you go towards, I would say probably the middle of the document, or maybe about 2/3 of the way in, you'll kind of see the core assets section. Um, and so one thing we can kind of get into in a second is I want to set parameters around what percentage of our treasury is in core assets versus non-core asset. But one thing I think is probably better to discuss first is just what's the criteria of what you guys see as like a core asset that if you want your protocol and your DAO and your community to feel rock solid, and really kind of be able to fulfill all its mission and objectives. What are the type of assets that you'd want it to hold, and how would you define that? And so my first shot is trying to keep it simple, but at relatively high level at the same time, and so focusing on three criteria so far, and those are the asset has a high degree of liquidity and is readily available for trading. Assets that can be used for collateral for borrowing purposes, or assets that have numerous opportunities for capturing yield. Um, I think a lot of those would probably be classified as a lot of different stable coins, ETH and Bitcoin. And then Rook is a core asset just because it's our native. But outside of that, those are basically the three assets that I have seen and I believe are kind of ones that I would deem as core assets I'd want to hold for many years and feel comfortable with that. But does anybody have any thoughts about any other criteria that they would say are prime for being criteria for a core asset?
The
I would
native asset of any chain on which Rook has a presence.
Okay.
I don't know about that. I think it would be a lot easier to say wind down operations than wind down like a major position in a specific token. I mean, at least in terms of acquiring assets. If there was something that we received for a grant or something like that, then that would make a lot of sense.
So you're
Um,
saying like it could also be has commitments with regards to our strategy. Like
yeah, I would more think of it in like an M&A or partnership terms where maybe we are allowed to do a token swap or something as part of an arrangement, or we receive assets that have reserved um, timelines to them, like like our Alchemix has a period of which we have to hold it for, so like certain parameters set on assets. um I would want to look at those in like a certain light, and maybe it's a part of the strategy or maybe it's excluded from the strategy. I'm not really sure.
got it. I think that's a great one, and same with you, Joe. I really like the native assets of other chains, and I think it's definitely something we'll be exploring more and more, and I'll probably have some updates. I'd say in the next month or two about that.
Yeah. If I were to generalize that parameter a little bit, it's a core asset is something that you may require in order to continue participating in the network, which is why the native asset holding makes some sense.
Mm,
Because odds are those native assets are used to pay for the local gas environments. And that may apply with certain partnerships if we are required to hold the token in order to interact in their ecosystem. But that doesn't necessarily mean that that core asset allocation should be large. Just that as a necessity rather than an option, it becomes more of a core item.
Yeah, I think a perfect example of that would be like AVAX and having someone on Avalanche. And I believe you have to have, some certain amount of Avalanche for you to be able to look at the mempool or something.
got it. Yeah, which is one of the scariest things I've ever heard. That's the only way you have access to the mempool. It's unbelievable. But yeah, those are both great. Does anybody else have any other ideas around core asset criteria?
I was gonna say longevity of the protocol or the asset, making sure that it's been around for a long time and is relatively battle tested.
Got it. Got it. I think that's a good one, and I'll have to probably put some more thought into that and defining longevity and being battle tested. But yeah, I think that's great. Anybody else have any other ideas? Okay, cool. Well, again, the reason for this is not to just like have arbitrary definitions of what's a core asset and non-core asset, but if you scroll slightly above where that criteria is, again, really want to emphasize that what you see in this treasury composition little schedule is very much just arbitrary numbers that are plugged in and will be fine tweaked, together, and can definitely be flexible. So really the intent behind core assets versus non is to give us a little bit of parameters and bumpers to kind of operate in, with regards to our treasury. And instead of trying to bucket those too granularly, I think we could get ourselves in trouble. So wanted to just kind of keep it high level and just focus on, look, we want to make sure that the vast majority of our treasury is held in very very core assets that, to what we talked about, have a high degree of liquidity and really tradable. So we're not getting situations where we just can't trade anything. We can use it for collateral to do other things, and we can, go out and capture additional yield, or M&A partnership, whatever it may be, like we just talked about. But really making sure that we're not trying to time the market. We're not trying to come in and trade and get in and out of positions. We really want to have long term assets that, if we're not going to hold for 10 years, we shouldn't hold for 10 minutes for the most part. Um, and so, right now, I think what I'm having is my thought is trying to just kind of create, like I said, bumpers to operate in. So, if we aim for 85% of our treasury to be in core assets, I think, like, in my gut, that seems like a solid range to be in. And then when we go kind of below 75, it's like, okay, well, we've gone 75%. I don't know what that means. What was the catalyst to cause that? We can't assess, in real time, but that maybe means we should take on a little bit more, risk because of whatever the situation may be. Or actually, sorry, the upper bound would be that. But 75%, we're saying, okay, if any point, we just don't seem like we have enough core assets in our treasury, that means maybe we're probably getting too risky with just regards to our profile, our treasury profile in general. So maybe we need to kind of rebalance into more of our ETH or stablecoins or whatever that may be. Um, and so that's kind of what that means, and it applies on the opposite ends for the non-core assets. And so you can see that we're aiming relatively minimally to have, not a ton of core assets in there. And I can't really come up with an argument for why we want a ton of non-core assets in there. I can see situations where, if we were to be seeded or have some kind of strategic partnership that didn't have any kind of commitments, but maybe just took off. Like, let's just say, we had been on the floor of Bitcoin really early, and I know that's a ridiculous situation, but it took off, and it just happened so fast. We still have flexibility to kind of maintain that for a long time, up to 25% of our treasury. But then at some point, we're not in the business of just holding these assets for investment purposes. We're in the business of capturing MEV and distributing and making that more of a democratic and egalitarian process. Um, and so that's kind of the thought process behind there. And just one thing to kind of emphasize here is that if something is not considered a core asset, by default, it's going to be classified as a non-core asset. So, does anybody else have any thoughts, just about that strategy in general?
You know,
Um,
oh, go ahead, Aya.
yeah, I'm really appreciating what Above Average Joe brought up. I'm just questioning if those are operational assets versus core assets. Like even if they end up managed by the same people, I think they're thought about differently. Kind of like where you're saying everything that's not core is non-core, and I think that there can be important assets to make sure you have that aren't core assets of the general treasury but are core assets for operations. And I think that's a distinction that should be maintained, which I think is what Dietz was trying to say earlier.
Do you think that there's value in breaking off things like operational expenses from long, short term kind of treasury holdings? And that way we know, okay, well, this is our long term holdings. This is our, quarterly labs budget and some, kind of airdrops we got or something like that. What's your thought about that?
Yeah, so I think it's a great thought, and I would say a lot of that is addressed, closer to the overview section in the expected use of funds. You'll see how we kind of bucket, and classify all the different reasons, and how do we view our treasury, and what's the use cases of that. And so ongoing operations is priority number one, so we can kind of define that there. And then kind of making sure that we have enough to meet those objectives is, basically you'll see that there's a formula that says here's how many in capital reserves that we need to have basically earmarked. And I have earmarked right now, but I think that there's probably an argument to be had for actually separating those funds out into a different address. but I'm always hesitant about fragmenting liquidity and creating another multi-sig, which has it's additional risk. Um, and just is a more of a headache for any contributors that are managing that to manage. So yes, we basically there should be always 2 times the operating expenses for the previous quarter. That's earmarked as a capital reserve and held exclusively in approved stable coins. So that's relatively addressed there. Did I address all components of that question, Teets?
Yes, thank you. Sounds like I should have read more closely.
No, I mean it's a big document, and we started further down. There's a lot in here. I'm gonna kind of pick and choose, and over the next couple Treasury Tuesdays, some sections that we can kind of hone in on and kind of all kind of discuss like we're doing now. But I think it's a great thought. Anybody else have any thoughts about core versus non-core assets?
Yeah, what about the process of moving things in or out of core?
Absolutely. Yeah, so there's actually a section that says adding or removing core assets. It's right below the criteria. So basically, there should be a KIP that must be ratified through general governance to add or remove something as a core asset. And, I don't think I mentioned this, which is definitely a no-no on my end, but a big part of this is not to just create parameters for us, our treasury and our community and our DAO to operate in, but really a lot of this is to provide guidance and parameters for SOFONs to make better decisions. So rather than just kind of making decisions in a silo, they can look to something that has been approved by the DAO and say, okay, here's more specific guidance on how we should operate and how we should make decisions. So I did not mention that, but yeah, to your point, there is a section on just that basically says, here's the criteria for what a core asset must be, and then if somebody wants to add or remove, then there should be a KIP that must go through governance, and then the SOFONs can then have this core asset criteria guidance to actually make an informed decision about that.
Is there going to be any core asset allocation expectations accounted for in that framework at all?
Are you saying like within this bucket of core assets having a more granular breakdown between like ETH, Bitcoin, and stablecoins like that? You're saying?
Yeah, like if you wind up with double the average weight in one particular asset, you diversify that asset into the other core assets to maintain a relatively even spread, or is there anything like that under thought?
I think originally I had something that was quite granular that broke out stablecoins and then it bucketed ETH and Bitcoin together, and then Rook together. And I just felt that if we did that, there's a very high chance that something could pump or something could just completely collapse. I don't think there's anything will completely collapse, but something could pump to the point where it just kind of puts us in a situation where we have to sell it, even maybe we don't really need to. So I thought we would still have the ability to kind of, as a community, as a treasury team, have discretion to rebalance and just kind of use our gut, but not be mandated by something like this that I think could get us in a more tricky situation. Like if ETH just started pumping and pumping, post merge or even leading up to it, I think we would be smart to take some off the table. But the last thing I'd want to do is be required to sell it. Because I think myself and a lot of others included are very confident in that asset long term, and we want to see that appreciate, and we do believe it has high upside potential. But again, we don't want to just have to sell it at a point in time just because of something being slightly outside of the range.
Okay. In that kind of thought, I do like the idea of, at the very least, codifying what is enough that you should take something off the table. Um, in the personal case, it's if there is life-changing money there, change your life and worry about what comes next. So, what is the metaphorical equivalent of life-changing money for Rook? Like, what would we consider something like that where we'd say we should take some of this off the table?
I think the life changing money would be so impactful that the um, upper bound of a range or a lower bound of the range would be impacted. So I think any really, really material event would cause those upper or lower bounds to change, and we'd kind of be forced to take that action. But with that being said, I think it's probably better to kind of focus on how we expect to just use our treasury, and knowing where we are, especially from like a projection standpoint. So like obviously, if you go to the very top, the prior number 4 is strategic investments, right? Um, and that's not where we want to. So I think it's just one of those things where we're balancing out. If we have sufficient capital reserves and we have sufficient stable coins, and based on our runway from our contributor compensation perspective, whether we feel like we're in enough of a place where we can kind of assume a little bit more risk for multiple years, then we can probably just to take on this a little bit more risk. But I think it's just one of the things when it when you see it, right? And we'll, as a treasure team and community, always have to just kind of monitor that. But one thing I just want to highlight again is I think there's always something that's to be said about explicitly requiring something versus like striving to maintain. And we're definitely in the latter throughout, at least how this is written currently. But all very good thoughts. Does anybody else have any ideas or thoughts about this? Okay, great. The other thing that's
actually I do.
Yeah, go for it.
And trying to see the value in what Above Average Joe is talking about in your perspective, and wondering if even having, like you say, it'll be obvious when it happens, but that doesn't mean it wouldn't be useful to make it part of policy to officially have to be in a discussion about it at certain points, which doesn't force you to do anything, but does force the community to be like, hey, we really thought at a certain point, whether it's high or low, that this should be talked about, so that it's really clear that we're going to talk about this. Because, and I think that prevents any of the harm you're afraid of, and definitely brings the conscious intention that Above Average Joe was striving for in terms of being smart with the treasury.
Okay. Well, maybe we'll focus on the core assets right now, and you'll see maybe how this could get some coverage, how things are written now. So, with us holding, with how it's written, at least currently, so much in core assets, Rook, we're not, we don't have any plans to sell that. I don't think the community would support something like that, because again, it affects everybody, and that's something we just plan to hold for a long time, or in perpetuity. Stable coins are stable. They're not going to create life changing money. And then really, it's only ETH and Bitcoin from there. Um, and again, those could really kind of pump, but if they pump, everything else is going to be kind of going kind of alongside it to some degree, or at least that's how it historically has been. So with us focusing on those core assets, I don't think that there's gonna be these situations where we have this asset that's kind of unrelated to our business that we don't plan on holding for a long time anyways. That's why ETH and Bitcoin are kind of in those buckets. And then where I was going to go next that may address this is, um, these high risk investments. You'll see that right above that. But these high risk investments are ones that like have the highest likelihood of being these situations where they could be like seed investments where the protocol may have just launched, or we may not have full understanding of the protocol because again maybe it's just very new. Maybe they don't have smart contract or audits ready, or maybe the conflict of interest, or some related parties, and maybe where there's no signs of integration. There's no active communication, and so you'll see right above that we actually have a requirement that no high risk investment should be more than 5% of our treasury, and almost always a high risk investment is going to be a non core asset, for the most part. And I think there's not a lot of situations because, and again, I think it's a great point by Dietz that outside of those strategic M&A and partnerships where we're kind of committed to holding those, and again, if that's considered a core asset, that should get coverage of most, and everything else is probably going to fall within this high risk asset because it's really more for those assets that are unrelated to the business. So I think that having that requirement, and maybe I can just have some additional language that might capture a little bit more within that. But that should hopefully, cause us to make sure that we're always kind of taking some money off the table if we do experience something like that. What do you guys think about that?
That makes a lot of sense. And I know you don't want to be trying to pick tops and bottoms, but I think what Above Average Joe was talking about, and in if you've studied markets at all, the crypto market has been this way very strong. There are definitely smart places to take profits, and you can buy back in later, which would just build your stablecoin reserves some as a way of kind of doing some balancing.
Yeah, without a doubt. I'm just always trying to think of what are those assets that we could get in that situation. And like I'm just trying to think about like what our non-core assets will be, and I think they'll be very limited. And I think a lot of those, you know, especially if we include kind of any kind of that's a agreement or commitment to partners or any kind of M&A seeding, if that's considered core asset, then that's going to capture most things that are going to cause that. But yeah, I think I'll definitely give it some thought and see how we can try to capture and create a clause that says, hey, we need to at least consider or we're required to take some money off the table if we ever do experience something like that. So let me give that some thought here.
The ratio of holdings, I think, may provide a natural high water mark for you there. For example, say we are looking at a non-core high-risk asset that has hit its payoff scenario and it's in its moon day. There's a very short period of time that we're likely to be able to take the maximum value of that off the table. But when it crosses that threshold of percentage allocation among the entire portfolio, that will be a strong signal that, hey, this imbalance that has been created by the bull run is the trigger mechanism, because that will only go off in those hyper profitable situations. And then perhaps in the inverse, you can only trigger the buyback in if you want to take that route after that first trigger has gone off and then a second trigger of a subsequent drop is put into place. But in terms of getting percentages there, I wouldn't expect a ton of capability there because the monitoring requirements are high. Um, but the scenario specifically where that high value investment payoff window is narrow is the situation you're going to want to engineer your solution for, because if you wait until that scenario is happening to have the discussion about taking the money off the table, it may be off the table before you grabbed it. So that's the only real thing I can see as far as specific engineering. It doesn't necessarily have to apply to the whole ecosystem, but just in this scenario.
Got it. Got it. Yeah, and if I'm understanding correctly, one thing to note is we are always going to be slower moving than an individual because we have to get some kind of consensus, and most likely we're going to have to write a KIP because if it's life changing money, it's probably above that non discretionary or that non core asset discretionary threshold of 100,000. So in that situation, it's going to still probably have to go through governance, and we could always try to push to be move fast as possible. But in the end, there's going to be people that maybe are like, hey, let's hold it, maybe let's not hold it. And as long as we have these rough parameters to kind of work with, that should help. So I don't think we'll ever be able to kind of get in those optimal price situations. And I think because of that fact, that's a big reason why I think we need to focus just on these kind of major core assets that we just want to hold for the long term. Because again, we're never going to be able to trade as effectively as everybody, and and as soon as we do have to have these kind of public facing discussions and public kips, we signal to the rest of the ecosystem our intent, and we run the risk of being front run. So another big reason to kind of focus mainly on these kind of core assets where we're not trying to come in and out for the most part. Anyone else have any thoughts on this? I would love if that happened though, Joe. I'm all about life changing money here.
For
Um,
sure.
but yeah, one thing I did want to kind of talk through now that we're kind of talking about that high risk investment that should give us a little bit of coverage over what we were just discussing. But right now, I think I just kind of went over the criteria at a really high level. But does anybody else have anything to say about like kind of a high risk investment? Maybe this is gonna not be the best thing to say, but I'm gonna say anyways. But like I would say CVX is very much like a high risk investment. It doesn't really have anything to do with our operations. It requires a high level of sophistication to monitor and a lot of time to monitor. And I know there's solutions, but it also puts us in that situation where we can't get in and out very quickly without signaling to the rest of the space, our intent. I think we saw this firsthand when we actually tried to buy it way back when we got front run like crazy. So I think that's like when I think of how to classify like a high risk investment, I would say like that's very much like a good example, and maybe others disagree. Um, but again, like based on the criteria, I would say that one would probably fall into that. But does anybody else have any thought about what criteria is listed here, or just any ideas about things to add?
Matt, how do you feel about that um, scoring system or that risk scoring system that Yearn has been using for their strategies? Do you think that adapting something to kind of monitor treasury investments and proposals in kind of a similar way would be useful?
Yeah, I'm torn because I think a scoring system is going to be something that hopefully is evolving quite frequently as the space changes. And I think that this will evolve, but I'm hoping that this is a relatively core document that stays somewhat stagnant. Again, I know it's going to change, but that's at least my goal and intent here. So a scoring system, I think, is one thing I think would be really cool to like integrate somehow into. I don't want to say integrate into the templates per se, but integrate adjacent to the templates that we have around our investments. So it's saying if you want to make a strategic investment, here is the type of things that we'd want to see included in a KIP, and here are a couple of different methodologies for by which the team and the researchers should be incorporating into this template as their research. And I don't think that it's always going to fit the same way. Like I think us analyzing and scoring like a staking derivative versus something like CVX would be extremely different. It's going to have different criteria and attributes and different things that we're going to score and weight. And so I think it's going to kind of ebb and flow with depending on the situation. So that was kind of what I was going to layer on. Once we kind of get this in place, if we get this in place, assuming it gets buy-in and gets ratified and adopted, but that's my intent with regards to the scoring system. But I did like it, and it's definitely something I want to see incorporated somehow, some way.
Yeah, that makes sense.
Right. Okay. Cool. I think. Does anybody else have anything they'd like to say around kind of what we talked about in the treasury management framework?
Matt, just one last thought on high risk. Um, I would probably say that us taking a directional bet on the success of another protocol, i.e., taking a bet on their price, um, might not be as I would say that might be something we might want to avoid.
Yeah. Yeah, I think that's good, and I would have probably pushed back on that, but I think your point about the commitments to partners through M&A or partnership, whatever that looks like, incorporating that criteria in the core asset criteria is really key to that not being kind of a conflict. So I do like that. And I think it also helps us with regards to how we get our yield. I think like it allows us to make sure that we're not just going in and trying to get as much yield as possible that maybe half of it's in some crap coin or shit coin that's just going to completely drop, and that yield that we thought we were going to have that was really high is just complete garbage. So I think that's a really great ad. I put it here.
I mean, and I just think that you see greater fluctuations, and just the same as with our native token. But if you look at the core assets, I mean, stable coins are stable, and you have you know BTC and ETH there, and those are what I would consider kind of like market leaders. Everything else is going to have more volatility than that, and I would say that with that comes the risk.
I would
Absolutely.
be curious about the types of parameters around creating operational endowments, um, i.e., or e.g., I guess, um, the first quest system. They're looking at roughly 1K a month to fund that ecosystem bot, and a deployment of capital that produces a sufficient yield to cover that would net an opportunity cost funded operation for the organization. And it is capital intensive to set something like that up, but in the sustainability department, as long as we're not overexposing ourselves to risk, there could be value to be had in doing things like that on a selective basis.
So
Yeah,
when
I
you're
think it's
saying, oh, sorry, Matt, go ahead.
no, go for it, Kyle.
Well, I was going to say, it sounds like you are saying that you look for an endowment instead of a just a regular operating budget, that we have with our regular typical kind of quarterly budgets that we make. Is that what you're saying? Is something that might be a little bit more long term, that you want long term funds set aside, like I would say like the grant we did for the TWAM guys?
I'm not familiar with that particular example, but probably so. Um, just as an option. Um, you know, it'd be the equivalent of earning enough in your bank account to pay for your Netflix membership. You just keep enough in there to hold that, and the opportunity cost generates the public good source of funds. And so, capital intensive for the initial setup, but then indefinite sustainability, assuming the yield source continues.
I think it's definitely something worth exploring. I will say I think it's going to be better as we mature and we have the historical data to understand, um, what those ongoing costs are always going to be. I also think one thing that kind of hinders our ability to do that is just how volatile DeFi yields really are. I think if we had tried to create an endowment, a year ago and say, okay, this is going to continue funding operations and we're going to rely on this yield to do that. And we see ourselves now with like 1 to 2%, especially on stable coins, because you probably want it in something like that. Um, we'd probably be in a little bit of trouble. So it's something that I think requires maturity by both us as an organization as well as just the ecosystem as a whole, or maybe I should say DeFi as a whole. But I think it's something to strive for, and I think as we create and if we create more like offshoot, maybe sub DAOs or units or sub projects or whatever, or ongoing initiatives that really are more autonomous in nature. And when I say autonomous in nature, I mean like kind of unrelated to what we're trying to build fully within labs or in this DAO. I think that's a prime opportunity for something exactly like that.
Yeah, I guess what I'm trying to establish is a framework for evaluating the Treasury's health parameters, enough to say whether or not something like that could be greenlit, which could lead to an entire strategic matrix that allows for the DAO to only use certain parameters in certain market conditions.
Think I picked up what you're saying, but maybe if you could elaborate just a little bit on the matrix that you were referencing.
Well, so if the single implementation is, uh, forgive me, I just want to say local, but that goes nowhere. I'll start over. Um, the matrix itself is kind of a reflection of like what would be considered, a green light parameter. So if we are in a treasury scenario where our core asset holdings is equal to less than 3 years of runway at current market value, that indicates a red light. We don't invest under those conditions on these types of protocols or parameters. But if our treasury is above this certain threshold, then that is a green light for that type of investment. So you get a relationship between different items of treasury aspects or specific compositions and their counterparts of different types of interaction, and create a web that says this is when those sorts of moves are valid.
That makes sense, and I think that's probably something I'd want to layer on for sure. I think, I think I had a lot of something like that when I had it in the treasury composition section. Um, but again, I think it requires more maturity about like our operations to know what that looks like. Because yeah, I think we can have the ability to really ebb and flow, to a high degree. But yeah, I think it's something to definitely layer on for sure. And I do think that some of that gets coverage with through the capital reserve requirement that we see kind of above as well. Does anybody else have any? I know we have about 2 minutes left, but does anybody else have anything they'd like to say about anything we've discussed today?
Just gonna throw it out there. Do we have any inflation compensation mechanisms in calculations?
Within this framework or just in
Just
general?
generally, like, is there anything monitoring that sort of change in the fiat conditions that we're operating in?
Yeah, so I can say that under a current structure that will be presented, in September, assuming that stays the same, we're basically taking a basket of tech companies and crypto companies that we feel are related, similar to how we did this before. And because of that process, we actually are updating that in like actual compensation in real time, accordingly. And that could go up, that could go down. And so yeah, we're basically doing it through that, assuming that those companies are kind of following the inflation. One other thing I will say about that is I think that only really impacts contributor compensation and not really other things because inflation is really just your ability to buy a basket of commodities and other type of goods, right? And obviously that's more dependent for us because we're a digital organization. It's more dependent on our contributors and are we still competitive in the market? And so I think we'll always we have an in-house recruiter, and so we'll know if we're not being competitive when it comes to prices and or compensation. And if people are always going elsewhere when we interview them and they're saying, hey, your pay's too low, I think we'll know it through that. But then I think we're also getting kind of coverage over potential inflation or degradation in salaries through kind of monitoring a basket of companies rather than like of commodities and goods.
Matt, I also do want to point out that for things like contractors and part-time contributors as well, we've made historical kind of market adjustments, whether it was Rook amounts based off of where things were headed, or switching to stables. So there is flexibility in adjusting part-time contributor rates. that come through the labs budget, and that, but I would not say that we've um, brought that up in a while.
Cool. Yeah, I think it's always something to really consider. And again, I think one thing we have to always keep in mind is not being U.S. centric. Like I think all contribute. Oh, I guess we pay in stable coins in USDC, so it really is U.S. centric. But we'll always monitor if things get really out of control. We can assess in real time, and we always have to kind of keep the runway in mind. So there's other decisions that can be made from there. But yeah, it's something to monitor. But we're hoping that the mechanism that we have for how we structure our actual compensation by using other companies who are very large and monitoring that and making sure that they're staying hyper competitive as well. Hopefully, addresses that through them. Great. Does anybody else have anything they'd like to say about anything discussed or anything like to see on the agenda next week or just in general? Okay. Well, I see the gas bot is at 7, so that's nice. Hopefully, you guys go out there and have some fun with that low gas. But otherwise, I really appreciate you guys stopping by and giving your great input. And we'll kick these things back off. 2 Tuesdays from now. And if anybody has anything they'd like to get involved in, or placing the agenda for next week, or just discuss in general, please reach out to me directly or tag me somewhere in a public chat.
And Matt, I'm just going to butt in and remind everyone we've got DAO office hours tomorrow at 3 p.m. Eastern time as well. So come hang with us, jam on some cool stuff. We talked about some fun stuff last week, and hopefully look to continue some of those conversations.
Yes, please bring your hardest questions possible for Teats.
All right. Well, I have a doctor's appointment.
Cool. Well, again, really appreciate everybody stopping by, and go touch some grass and have a great day.
Thanks, Matt.
Thanks,
Bye,
Matt.
everybody.
Thanks, Matt.